The information provided on this podcast is for informational and educational purposes only and does not constitute professional advice. Reliance on any information provided is done solely at your own risk. You should consult with a professional to determine what may be best for your individual needs. The views and opinions expressed in this podcast are those of the individual hosts and guests and do not necessarily reflect the official policy or position of Bell Bank. Right now, my family and I rent a house. That works for us in part because my spouse and I are not what you'd call handy, so it's really nice that when something breaks, it's not our problem. But we know that it could make a lot of sense financially and otherwise to buy our own home someday. Right now, in 2026, that prospect is a little intimidating, and not just because I only have a vague idea of how a sump pump works. The country is in a housing crunch, and no community is immune. With demand high at all levels, buying a starter home takes more planning and more money than it used to. Fortunately, we have two mortgage professionals here to help me out. Oh, and of course, to help you out, too. I'm Jay Gabler of Forum Communications, and this is Plain Money Talk, a podcast all about your financial life and the things that are affecting it today. Today, I'm joined by two mortgage professionals from Bell Bank, Affordable Product Manager Emily Strong and Loan Officer Liz Koehler. They're going to share some of the things you need to know right now when you're considering a home purchase, whether it's your first time as a home buyer or your next. Emily and Liz, thanks for joining us.
Thanks for having us.
Thank you.
I'd like to jump in with 5 quick questions. So if you would, please just answer these questions as concisely as you can, and we'll plunge into all these topics in greater depth a little bit later in the podcast. Maybe not all the topics, but just to get people started with the subject matter. First quick question. Right now, is the proportion of homeowners compared to renters growing or shrinking in the United States?
Jay, it's interesting. The perception is that proportion of homeowners compared to renters would likely be less. And at times it does feel that way because it can be challenging to buy. However, in fact, it's basically flat or slightly increasing. And there really is no meaningful growth. The Census Bureau said that the U.S. homeownership rate was 65.7% in Q4 of 2025. And this was basically the same as a year earlier. Rates did dip in the fourth quarter of 2025, so this brought new buyers who were waiting for this opportunity back into the marketplace.
That surprises me, so I'm already learning something. Question number 2. Is home ownership something that everyone should consider?
I do agree that, yes, it is a consideration for everybody. Firstly, we all need somewhere to live. And secondly, it's a great way to start to create equity and to build some wealth. However, being a buyer does have some additional responsibilities. You take on repair costs, taxes, and insurance. And so to your point, Jay, it has extra costs that renting does not. If you're considering a move also within a few years, then added buying and selling costs may not make it financially viable, but it's always a great topic to explore with a mortgage professional.
Well, great. That's exactly why we're having both of you on today, so this is perfect. All right, quick question number 3. If I'm financing a home purchase, am I likely to find myself competing with a buyer who can pay cash? Is that common?
Yes, it is. The National Association of Realtors stated that in 2025, 26% of buyers paid all cash, which is an all-time high. Finance buyers can run into cash competition. It varies by market and price point. However, finance buyers can still win with strong realtor advice, lender education, and positioning themselves as strong, aggressive options to be taken seriously.
Okay, great. 4th quick question. If I wait a while, is the housing market likely to get more buyer-friendly?
Likely not. If you want to be in the market, just start. You can't control rates, you can't control inventory levels, but you can control what you bring to the table. Financial worthiness, being educated, ready to jump in and start participating. So it's always a yes. It's just a yes when.
Okay, so it sounds the good news there is that there's a lot in my control if I can plan properly. Great.
Correct.
All right, 5th quick question. What's your favorite room in your home, each of you?
Well, mine's actually my garage. That's where all of my tools are. I'm a aficionado of bike repair, so that's where all of my stuff is. That's my room.
And my room is a kitchen. It's where the family meets and congregates. With 4 young adult sons, our lives are busy, so dinner time is where we kind of connect and pause and catch up on the day.
Oh, that's wonderful. Emily, I'm a biker as well. I wish I could say that the room in my home, the basement where the bike and bike tools are stored, is my favorite room. Not quite there, but I'll try to tidy it up, do a little spring cleaning, and see if I can, rise it up in the rankings.
I just like that Liz likes to be with her family. I go in the garage to escape from my family. So, it's two opposing opinions here.
Many rooms, many purposes. Well, thanks for answering those quick questions. Now let's get to know you both a little bit better. I'd love it if you'd each share where you're based in the country and how'd you get into your line of work?
So I am based here in the Twin Cities in Minnesota, and kind of a long process of just trying things out of college and sort of fell into the mortgage industry. I've been doing housing in some form, nonprofit, for-profit, and government work for the last 20 years. And so it's kind of cool to have all aspects of that to kind of help shape the work that I do. So that's kind of where I came from.
And similarly, I'm also located in Twin Cities. I was originally from the UK and started in banking and finance many, many moons ago. I made the crazy mistake of buying my first house at 18. And I say that tongue-in-cheek. It was a great move. And that really kind of fueled the desire to help other people do the same, because it created a good life for me, especially coming over here to the United States.
Oh, that's a great story. And certainly buying a first home is a huge step in everyone's life. And I can see where especially that's true in your case, Liz.
Thank you.
Well, let's help our listeners set up some basic expectations for what they're looking at going into the market right now. What are some baseline things that people who are shopping for homes, especially first-time buyers, what are some basic things that the people should know about what they're getting into with this market as it is right now?
Well, I think probably the best thing to do is to get educated. And I always encourage people to start with their loan officer. I think a lot of us, when you start looking for a home, start with a real estate agent. And there's nothing wrong with that. But I think it's always helpful to know where you're at in the financial picture and what you can afford. It's really helpful to talk to someone like Liz, who knows a lot about home buying and is really educated on the different programs and products out there. So it's really important to get that sort of baseline of education before you get too far into it.
I would agree. Absolutely. That's the best first place.
Okay. So it's a little bit less important maybe to understand the market than it is to understand your own situation and to make sure you have all the knowledge you need to move on the right property.
Yeah, and I think it's important to look at what's out there. A lot of people hear about different programs that are available, and they make one of two assumptions, is that there's a boatload of free money out there and I'm going to get that, or there's nothing available for me, so why should I even try? And so it can be intimidating. You start Googling what's available for down payment assistance or maybe to make home ownership more affordable, and it can get overwhelming very quickly. And so I think one of the key elements I tell any of my friends and family that are looking for a home is work with someone who doesn't immediately shut you down when you bring up affordable products. Because if someone's like, oh, you're not eligible, or that's too hard, or we don't really do that here, those to me are red flags. So if you've done a little bit of research and you know there are some programs out there for you, possibly, you want to be working with a lender who's very receptive to that. Even if you don't qualify, you know they've got your back when they've taken a look at everything that's possibly available for you.
Sounds kind of like the advice you might give someone who's looking at college. Don't assume that this is going to be free, but also don't assume that you'll necessarily be priced out of your dream college because financial aid is available. It sounds like it's a little bit similar there.
Absolutely. Getting in touch and really recognizing that, again, it could be a yes, it's just a yes when, and understanding the programs and having a plan in place to be able to strategize to get there, that's key. So encouragement and motivation and just talking to the right person.
I think we're doing that right now. Of course, people will want to get their own personal advice, but this is a lot of great information we're getting right off the bat for listeners to the podcast. All right, well, let's continue taking me as an example, because why not? So let's say that I come to two of you and say, okay, here's what I'm paying in rent right now, and here's what that gets me for a rental property. What relationship does that have to the kind of home I would be likely to move into as a buyer?
Great question, Jay. Here in the Twin Cities market, I looked at average rent for a two-bedroom home, and roughly that's around $2,200 to $2,300. the equivalent price point for that home with a monthly payment is usually around $225 to $250.
And is down payment going to make a significant difference there, the amount that I've saved for a potential down payment?
It can make a difference. Whether it's significant or not is another factor. A lot of the programs allow for minimal down, and sometimes when you have additional cash, sometimes the strategy is also to look at other areas in your financial world that you might be able to pay off some things, to get rid of some high credit card debt, some other loans that you might have outstanding. So it's really a holistic approach and not just looking directly at the mortgage payment.
Okay. So it's good to know that if I'm a renter and I'm looking to buy, I could very likely end up in the same ballpark. Maybe not on the same base, maybe not in the same part of the outfield, but, in the same ballpark.
Right, exactly. Yep.
So if I'm a first-time home buyer specifically, you mentioned some programs. I'm sure there are more than we can get into in this short podcast, but what are some of the big programs that I should be aware of as a potential first-time home buyer that could maybe help me out?
So if you're going to go for sort of the biggest swath of what most people will qualify for in the most areas in a state, each state has something called a Housing Finance Agency, or HFA. And typically they all have their own home buyer programs. A lot of them are very similar. In the state of Minnesota, we're very lucky. We're one of the best HFA programs exists right now. And so it gives you an option not only for a competitive first mortgage with a competitive interest rate, but also maybe some down payment assistance that can help make it a little bit more affordable. And what's nice is those programs are statewide, so they're not based on individual communities. But the other cool thing is that different communities might have specific down payment assistance programs available based on income or based on where you're purchasing in that community. But that's the thing. It can get a little overwhelming if you start going through all the criteria. And that's where someone like Liz, who has spent a lot of time understanding these programs, can say, you're moving here and this is your income. This is going to be a great program for you. And so I think starting kind of at the top with the HFAs and see if that fits, then poking around into the different community pockets for funding. Another thing that the state of Minnesota has been interested in, and we're starting to see it actually come around in other states as well, is first-generation programs for borrowers whose families have never owned a home. So they would actually be the first homeowner in their entire family line. Therefore building that generational wealth like Liz was talking about. So that's another option. But really, state, local, those are where you can go. And then like at Bell, for shameless plug here, we have our own internal down payment program that gets a lot of traction as well. And that helps low to moderate income borrowers really achieve homeownership. And sometimes it allows a borrower to use our funding, and then they can use their funding for things like maybe getting new carpet or maybe getting that fridge that they really want or whatever it might be, sort of leveraging funding in different ways to help achieve your different homeownership goals.
Great. And you mentioned those programs at the local level. Do they vary substantially enough that they might actually affect people's decision? I know there are a lot of factors that go into this, but I mean, are the differences meaningful enough that people might think, I was going to move to this community, but this one is not that far away and I could get a better deal there? Are the differences at that level where they'll play into people's calculations?
Yeah, sometimes we have, for sure, that it may mean that because the program is more advantageous, that they may actually geographically move. But sometimes people are also really conscious of schools and work location and things of that nature too.
This is making me curious to find out what sort of programs I might be eligible for and my family might be eligible for. So this is great, piquing my interest and increasing my enthusiasm about potentially buying a house. Now, Emily, I know that you have been closely following developments in the Twin Cities housing market, and I wonder if you could share some of those insights that you've gained following this market with us.
Yeah. So I kind of alluded to this a bit earlier, but the first generation homeownership programs really have taken hold in Minnesota. Our state legislature approved $150 million and a little extra change for programs specific to first generation buyers who they themselves nor their parents have owned before. And so it's a really interesting targeting criteria to help target borrowers who haven't had the same opportunities to build wealth or to get into homeownership. It's a really great opportunity because it's substantial money. I mean, we're talking $30,000+ in assistance. So I think it's important to note that there's kind of two definitions that sound a lot alike, but are a little bit different. You got the first-time home buyer, and then you have the first-generation home buyer. First time typically means you haven't owned a home in the past 3 years. First generation means that you nor your parents have not owned a home ever. And so that's pretty cool to see different ways of targeting different buyers. One of the things that we're seeing too is targeting by income. We know that borrowers at a certain income level struggle to be competitive in the market. And so there are a few grant programs available out there. There are also some community programs that really target borrowers who are at maybe, I'm going to use a term here called area median income. So there's a certain threshold, and if you meet that or you're below it, you would have access to more funds than someone who maybe has higher income. And as the market gets a little tighter and as these programs become more and more popular, as people enter the housing market, those programs tend to look more favorably at borrowers with a bit lower income or lower area median income to help sort of boost them into homeownership and get them on the same level as their peers.
So it sounds like there's some good sources of potential help available in the Twin Cities area, in Minnesota. And I would gather if we have listeners who are not in Minnesota, which I hope we do have lots of them, as well as lots in Minnesota, the advice is to get a good lender and get good, sound financial advice before you hop into the market.
Yeah, I think it's, the trend across the country too, because we do have lending offices. I mean, we lend in, I think, like 40 states now. Like we're pretty broad. And so we'll look at the different programs available to borrowers across the country. And you're seeing a lot of the same thing. It's that really moderate income borrower, and how can we assist them in getting into homeownership and doing so in a way that doesn't sort of put them in a bad equity position, making sure that they are able to build that equity so then they can build that wealth.
Yes, building wealth. It's always a good thing, and obviously very important for comfort later in life and what you can pass on, which will be the topic of another podcast episode coming up. A little bit of a spoiler there.
Behind every moment, there's a feeling of happiness, of security. Behind every dream, there's a spark. With every challenge, there's a safety net. Behind every victory, there's a team. Behind every moment, there's Bell Bank.
Well, let's change the subject a little bit. We'll stay on the subject of the housing market and mortgages and what have you, but I want to talk about house hacking. It's a term that I've been hearing lately. And, when I think of hacking, I still think of Lex trapping the dinosaurs in Jurassic Park. But I understand it means something very different in a housing context. I wonder if the two of you could share, what is house hacking? And is it something buyers should be considering right now?
House hacking is typically involving buying a single-family home and having a roommate, or buying a multifamily, duplex, triplex, etc., and renting it out while you live in one of the units. It requires some sacrifices, for sure, shared living, amenities, etc., but it can really provide some financial benefits. Biggest expenses usually that we have in life is a housing payment. So being able to share some of that with somebody that's renting can be financially really positive.
And I guess the benefits are, yes, clearly, as you say, there are sacrifices to be made in that you're sharing space, and there's the logistics of coordinating with whomever you might be sharing with, or whatever uses are being made of your home. But I suppose the benefits are then, as opposed to continuing to rent, you can build that equity.
Yeah, absolutely. That's right, Jay. But one question you have to ask yourself before you do the house hacking is, are you ready to be a landlord? Because that in of itself comes with more pieces and more responsibility. You certainly have to budget. You've got to cover any vacancy gaps that you might have. And then you have maybe managing, tenant disputes. So I think it's something to be entered into for sure. And a lot of clients chat and discuss that as an option, but I think you need to be careful.
Do you see any other methods of house hacking besides, sharing housing space with another person? That is, might you have a house where you rent out your garage to someone who needs garage space or something like that?
Yeah, absolutely. The technical term is ADU, accessory dwelling unit, and certainly some properties do have that particular space. With that, you have to be careful. If you've not owned a home before, then it's very difficult for qualification to count the income from that in qualification. So you still have to qualify on your own. Once you are a homeowner, then acquiring different properties to rent, now you've got some seasoning and some experience in that, and so that's looked on more favorably. Yeah.
Interesting. All right, let's get down to nuts and bolts. So I know enough to understand that I should pursue pre-approval for a home loan so that when I go out there and I find my dream house, I'm not reaching out to you two for a first conversation while I keep the seller waiting. What are the concrete steps that I would take to begin the pre-approval process?
Firstly, please have a conversation with a mortgage banker. Work with somebody to, as Emily alluded to earlier in this, make sure that you have a trust level in the communication. They should be asking you questions about your objectives, your dreams, everything that you're trying to ascertain. Be ready after that conversation to start an application, have your financial documents ready to provide. And through that process, part of the application also is to review credit. Rip the Band-Aid off, take a look at that, see where improvements might need to be made, or you may be surprised. You may already be in a position where with all those pieces, your income and employment, your savings and your credit, you might be more ready to buy than you actually think.
What I'm getting from this is that even though we're talking about fundamentally a financial transaction or a series of financial transactions that allow someone to become a home buyer, it can be emotional. That taking a hard, honest look at your own finances can be something that is not just about looking at numbers, but is about looking at the choices you've made in your life, looking at your career, looking at what your future might look like. What's it like to have those conversations?
It can be really powerful for them. It can be the right conversation to put them on a path. And again, going back to it's always a yes, it's just a yes when. It may not be today, but it might be in 6 months, a year. There may be some work to do. But I think we're also focused on looking at information online that can be fear-mongering in of itself. And so to actually know the baseline and know where you're starting from can be really empowering for people. And having a path to do it is the right way to go.
Right.
Yeah.
Well, I want to respect your time, not take too much more time, but I want to squeeze another question, if I may. In this competitive market, I know that sellers will likely have multiple offers. And of course, I want to be sure that there aren't going to be any unexpected financing hiccups that hold me up at the wrong time as a would-be buyer. What are some smart steps to take to be sure that I don't encounter any issues I didn't see coming when I'm ready to make an offer on a home?
Once you have gone through the pre-approval process with your mortgage banker, then one of the subsequent conversations should always be about strategy. It is really a competitive market with low inventory levels, interest rates bouncing around. And so one of the pieces that sometimes is overlooked in the mortgage process is really understanding some of the things that your realtor will present. So if you find the home and you're ready to go, you may be in a situation where others are ready to go on the same house. So now you're in multiple offers. So some of the strategies might be you're actually offering over list price. You might suggest appraisal gap strategy. And those things can be really confusing on a Saturday night at 6 o'clock when you're trying to get dinner for the little ones. So having those conversations ahead of time, being able to understand the math and the numbers behind it and the impact is really important. So not only getting pre-approved, but having strategy so that when you are actually out making an offer on a home, the equation becomes buyer plus realtor plus lender equals success. And if you're all on the same team, you can move forward and hopefully get that thing and snag it and get it under contract.
And I think one of the things to remember too that's really important, and you had mentioned this a little bit earlier, Liz, is that communication with your loan officer is critical because especially as a first-time home buyer, there are lots of questions and there's lots of acronyms and lots of things to understand. And so you want someone who can break it down for you, and also you don't feel dumb when they do it. You feel educated and empowered. And I think that's one of the reasons I love working with Liz so much is that I've heard her talk to buyers and it really makes it a whole process. So even though you are kind of getting financially naked, she makes it very comfortable. And she helps everybody understand the reasons why. Because as adults, we all want to know, why do I need to give all this information? Can't you just approve me? Well, no, you have to sort of get to that point where you've come sort of down to the brass tacks of what your financial picture is. And so someone who makes you feel comfortable and makes themselves available to you pretty much all the time. I don't want to advertise that for her, but she is available all the time, is really, really, really important because you don't want to be sitting at 6 o'clock on a Saturday night with a lot of questions about, is this something I can really afford? You want to have that partner in your corner doing that work.
Yeah, that's a great point, Emily, that I think, we can be conditioned right now to think that all loan processes should be absolutely quick, that, for example, retailers will try to convince you that you can apply for credit just right there at the register. It'll just take a sec. Doesn't even matter if there's a line of people waiting. We're going to get this taken care of for you. And maybe in some cases that's true. It can, for certain kinds of credit, that the process can be that quick, but it's not that way is what I'm hearing when buying a home.
Yep. And please don't do that after you've gotten your pre-approval, right, Liz?
No, that's right.
Don't go to the cash register and take out a new credit card.
Once you're approved, we need to keep you approved. So be financially very boring after that.
Great tip. Are there any additional, shall we say, no-nos that people should keep in mind for after they get pre-approved?
Absolutely. It is really important to keep your financial information and the baseline for approval where it's at. So that might mean not taking out those credit cards, certainly maybe receiving gift funds from family members or taking out a personal loan, things of that nature. I have a little line that I use with clients, which is don't buy a car, truck, or van unless you want to live in it, because that might change the dynamics of your pre-approval. So just being really conscious of those fiscal decisions that you make once you are pre-approved, because that can really mess things up. So keep everything financially boring once it's being done until you buy that house.
I know I was very tempted. I was very tempted to go out and, take out a personal loan for furniture right when I got pre-approved. And my loan officer back then was like, do not do that. Do not. So, yeah.
So to help people with their planning, if they're thinking about starting the home purchasing process, and I know this will vary for all kinds of reasons, so there's no one answer, but again, ballpark, just a general idea. Once someone is pre-approved, how long are they planning to sort of put the rest of their financial life in terms of making changes on hold until they likely are able to sort of move on that pre-approved home loan?
Great question. Technically, you are usually pre-approved for 120 days, so about 4 months. However, sometimes people don't find a house that quick, Jay. So you need to be fiscally careful until the end goal, which is really being in that home. So sometimes it takes people a long time to get there, and any financial decision you make can have an impact. So you just need to be really cautious and careful, and any big decisions, circle back with your mortgage banker and have the discussion.
So probably we're talking, generally speaking, months, probably not years.
Correct. This is not a life sentence. You can have a life at some point. You just need the house first.
Liz, quick question. I heard you use the term appraisal strategy and thinking about your appraisal strategy. Could you unpack that a little bit? What is appraisal strategy and how can that vary?
Yeah, so appraisal gap coverage is when you make an offer on a home, but you are advising the seller that even if the value comes in low, you'll still pay the same price. So it's just giving the sellers comfort that even if you're in a market where you're paying over for the home, that even if the value is not supported, you're still ready to make on that commitment.
This is a lot of great information for our listeners. So thanks both of you for taking time to join us today. We have a final question we ask all our guests on this podcast. I wonder if each of you could share one piece of financial advice you wished you'd been given a long time ago.
I'll let you go first.
Okay, sounds good. Mine is to, from an early age, make sure that you also have a financial advisor in the midst. We've talked on the podcast about leverage, but there also is another big part of the balance sheet, which is savings. So making sure that you're talking with somebody to be able to set aside funds, whether it's fully funding your 401ks, IRAs, whatever that might be, and setting aside some liquidity so that you can make this happen. That's really important. And that's something that I wish I'd done at an earlier age.
I think for me, understanding that, especially as a first-time home buyer, the first home that I bought needed some love. And so when I bought my first home, it was very accessible and the payment was fine. But then once we started having children and our student loans came due, having that extra funds available to do, minor repairs. We had a roof leak, or we wanted to get a fence so we could get a puppy for our kids. Those are things you have to save for. There's not a magic money tree in that backyard to shake, even though I swore I had one when I bought my first house. It's really important to understand that you will want to make upgrades and you will be forced to make some upgrades. And so planning for that, maybe with your financial advisor, like Liz suggested, is a really smart idea because eventually you're going to have to replace something and it might come a lot sooner than you anticipate.
This is all great to know. And I'm sure our listeners will really appreciate these insights into financial life in general and specifically the process of buying a home. Liz and Emily, thank you so much for being here with us today.
Thank you.
Thank you.
And thanks to our listeners for joining us on this episode of Plain Money Talk. Liz Koehler is a mortgage banker, NMLS number 461777. Connect with Liz at lizkoehler.com. That's LIZKOEHLER.com. Before we wrap up, a quick note from our sponsor, Bell Bank. If today's conversation left you wondering whether home ownership is within reach, you're not alone. But the good news is you don't have to figure it out on your own. The team at Bell Bank Mortgage works with first-time and first-generation homebuyers every day. They can help you understand your options, get pre-approved early, and avoid financing surprises when the right home comes along. Whether you're looking to buy now or are planning ahead, visit bell.bank/mortgage to get started. Bell Bank Mortgage is an equal housing lender. All loans are subject to credit approval. Income and property restrictions may apply. Program guidelines are subject to change without notice. Not all products are available in all markets. Specific programs and rates mentioned within the prior program may not be available at the time of airing. Additional information about Bell Bank Mortgage and the loan programs they offer can be found at www.bell.bank/mortgage. Other restrictions may apply.